All right, ladies and gentlemen, welcome in. We're going to talk about some YieldMax, ladies and gentlemen. Yes, YieldMax ETFs are trash, ladies and gentlemen. Came across this video. Let's go to this video, ladies and gentlemen, and check this out, ladies and gentlemen. This is what I want you guys to listen to, ladies and gentlemen, from the YieldMax manager here, that this guy answered a good question. Let's listen to what he had to say.
I want you to put your mind in the headspace of a retail ETF income investor. So when you look at the chart all time for a MISTI or an ULTI, and you see the chart with negative returns without income reinvested, think about like how...
What if you were prepared for all those interview curveballs?
Someone would feel, maybe like beginner level investor looking at those charts. What would you tell them when you're looking at those charts and they might not know how YieldMax works and maybe have something of criticism to say?
What's the first thing almost every investor?
All right, ladies and gentlemen, let's listen to this fund manager spin the wheel here, ladies and gentlemen. But he will not answer the question right because he's going to spin it to his own way of thinking, ladies and gentlemen. Let's listen to it.
Does whenever you look at a potential investment where there is a time series of price, you look at a chart. Everybody does it, right? In fact,
yes, everybody look at a chart. Let's look at the chart on this one, ladies and gentlemen. Alti came out February 29, 2024. Bravo. Brand new fund. Everybody want to buy into it, ladies and gentlemen. $20.42. Where is it at today? On this date. This date right here. November 8, 2025. $4.58. 20.42 minus 4.58. Yeah, lost over $15.84 in that time frame. Oh, wait a minute. Listen to his response, ladies and gentlemen. Listen to his response here.
most financial applications, whether it's Yahoo Finance or CNBC's website or any that you might use, when you put a ticker in, the first thing you get back is a price chart. YieldMax funds, because they pay...
Wait a minute. YieldMax fund, because they pay out a distribution or dividend, whatever you want to call it, ladies and gentlemen, payout. No. Yeah, add that in. He going to say, watch. He will say that through here, but go on. Listen to it, ladies and gentlemen.
These distributions, the price doesn't really reflect the value of an investment. It does if you're invested in something like Berkshire, because Berkshire doesn't pay any dividends. And it mostly does if you invest in something like SPY or one of the other S&P proxies, because while they do pay a dividend, those dividends are very small. When you're evaluating something that makes big distributions...
But he said because they're small dividends compared to what they do, it's totally different, ladies and gentlemen. Know what I'm getting from him. But he is skipping the question. I go to it. It goes a little bit more.
You have to account for those payments. Example I like to provide is, imagine a bank makes a car loan. They make the car loan and then they are paid back principal and interest over the course of time. If all you did was look at the value...
Here's the thinking, ladies and gentlemen. Okay, bank give you a loan. Okay, you're borrowing money, but you're giving your money to YieldMax to make you money. But are they really making you money, ladies and gentlemen? Not but what he's saying here. He's trying to say they're more like a bank giving you a car loan. Okay.
Of the principal that they are owed by the borrower, it's going steadily downward, right? You amortize the loan and the principal is just steadily declining. So that's essentially how much they're earning interest on. And
wow, your thing is declining like a car loan, okay, but you're losing your capital, but we're going to give you a little bit of money back of your own money. That way he is not saying here, ladies and gentlemen.
At the end of the loan, it's a zero. Now, these won't go to zero because it's always a percentage. So,
oh, he said these will not go to zero. You know why they won't go to zero? Because they will reverse split them, ladies and gentlemen. They will reverse split them, or they keep going down more. No, I'm
You
saying.
have a situation where it's not like there's a terminal date and you get your last bit of principal back. As I previously described, because you're giving people some of their capital gains and you're giving them some of the options income, the amount of principal, if you don't drip a portion of what you get back,
Oh, you must drip money back into this to keep your NAB erosion from declining, ladies and gentlemen. It's not a bonus. You think that it should be a bonus getting dividends? Huh. I think so, but I might not be right. Who knows? I'm just a guy on YouTube talking about finance. I'm not a financial advisor.
is very likely to decline in some of the strategies that distribute more aggressively. So you really have to think about it on a total return basis. Now, the other thing you have to think about, and this is the thing that I try to emphasize most, on the single stock covered call ETFs, make sure you like those stocks. If you don't like MicroStrategy or you're concerned about Bitcoin, you don't want to own Misty, because the first thing that Misty is doing is getting long strategy. So if those things are in downtrends, it's going to impact those covered calls. The diversified funds, on the other hand, I think speak better to the general strategy of selling covered calls. This is the reason why I like to use Biggie as an example.
Look, you go back to these funds that don't pay 12%, not these other funds that they first come out, ladies and gentlemen. He is deflecting this guy's question, and it's not right. I mean, if a YouTuber asks you a question, I would already broke into this and say, look, dude, we're not talking about bigging on them. We're talking about these single stiff ETF and Alti and YieldMax that's been out for a while. Just saying here, ladies and gentlemen,
What you're looking at is covered calls on basically the top 50 largest companies. And because of that, you can see what the relative performance of a strategy like this is.
Hey Georgia, it's time to take your natural gas rate plan and fix it. To compare it against other providers and see.
Compare Biggie to something like SPY, and at the end of 1 year, you would have had 11% essentially in distributions. It hasn't been quite a year because it didn't launch until the third week of last November.
But we're not talking about Biggie. We're talking about Alti, Misty, all these first funds that come out. He's deflecting the question like always, ladies and gentlemen. That's how these fund managers work here, ladies and gentlemen.
But it's up about 5% in terms of price, the share price, and you've collected 11% in dividends. Your total returns are about 16%. Since most of the returns came from distributions, that's why it's really important to look at total return, because if you only looked at a price chart, you would say, oh, well,
Total return is the biggest bullshit, ladies and gentlemen, that these fund managers are going to tell you. Total return you need to look at. That is so bullshit. When he just sit here and just look at the fund manager talking about total return, I would have came in and said, that's bullshit. That's bullshit. I'm losing capital. Come on, ladies and gentlemen. Let's get this right. YieldMax is a scam. You need to get to know that, ladies and gentlemen. Get out of it. If you're in it, you already lost money. You lost money, ladies and gentlemen. If you bought it in your brokerage account, just take it as a tax loss and write it off for the end of the year. Know what I'm just saying?
I'm only up 4.9% year over year when the S&P is up 14. But then if you say, well, but if I add back the distributions that I got, okay, now I'm up 16%. And the market's up 14%. So I did better than the market, and I was getting distributions regularly. That speaks to the strategy. When you look at the price charts, look at it on a total return basis. Now, again, there are funds like Misty, which is, MicroStrategy covered call. MicroStrategy is down almost 50%. Misty is down. So if you had bought it at the beginning of the year, it hasn't worked.
But how far is Misty down for the year, ladies and gentlemen? And look at that. For the year, Misty, he said MSCR is down 50% for the year. 64.3%, ladies and gentlemen, for the year. When Mr. go back up, my own strategy go back up, ladies and gentlemen, do you think this will go back up? No. Let's look at all time, ladies and gentlemen. Yes, we had a run up on March 28, 24. And it just came out. Yeah, good time for Bitcoin strategy. Then went down to here, below. Then run back up here, up to 40. Will this ever get back up to these points, ladies and gentlemen? No, never. Never will get back to these points because, look, it has steadily declined over time, ladies and gentlemen. Let's get back to this interview.
Out because the stock hasn't worked out. It's done very poorly. And that's the other point that I like to make to people, which is if you're looking at the single stock covered call ETFs, understand what these are. These are covered calls basically in a wrapper. So if you don't want to go through the process of doing covered calls yourself on that stock, you can buy this fund and it will do it for you as efficiently and effectively as it can. But you would never buy your...
But their strategy is so flawed, ladies and gentlemen, it's not even funny. When they do a cover call, it's in the money, not out of the money to make a profit. It's in the money. When it blows through that strike price, they're losing money, ladies and gentlemen. Just saying it, ladies and gentlemen. I have done options. I know what I'm doing. Understand what he's talking about. And they had two more in this great video.
one stock as your entire investment, right? You would build a portfolio of stocks. That's what the importance of diversification. And the same thing is true here. Covered call ETFs are based on single stocks. So you should build them into a portfolio, much like you would build a portfolio of other stocks. You would not put all of your, well, maybe some people have put all of their money into MicroStrategy, but it's not advisable generally to do that with your investments. You should diversify. So if you diversify, then you have the benefits of covered calls and the benefits of diversification. Now, I did a study recently, and I haven't updated it this morning, so I'd have to double check this.
Well, he did a study. Let us know what his study got to be about, ladies and gentlemen. Now I want to know. He did a study. So his own story out here, ladies and gentlemen.
But I was taking a look at every single one of the single stock covered call ETFs that YieldMax has on the long side. So meaning where the proxy is long the underlying stock and you sell covered calls. And there's 36 or so of those. Now, if you had taken $100 out of the S&P the day each of those were launched, and instead put that into each of those. So at this point, you would now own 36 covered call ETFs. You would have significantly outperformed not having done that, right? So the strategy did well overall, but it included some real dogs. Murny, for example, MRNY, which is based on Moderna. And why is that? That's because Moderna has done abysmally. There was that huge run-up in Moderna and Pfizer when everybody said, okay, we're going to have to do these vaccine shots all the time. It's going to be...
Yeah, but why keep Myrna in your thing since COVID been going down, ladies and gentlemen? Since we haven't had COVID shots, I mean, it's all optional now to get COVID shots. But I kept this one in, and it's down big time. It's big. I mean, I feel sorry for people that invested that. And still invest in that, ladies and gentlemen, because of this hype this guy tried to give you.
It'll be a regular thing. You're going to get boosted every 6 months. And that's just, it looked like both of those companies had a license to print money indefinitely. The bloom came off of that rose a bit, and people started to wonder whether these vaccines were efficacious. Some people have criticized them maybe a little bit more profoundly than that by suggesting that not only do they not help, but that, they have negative consequences. So what happened to the vaccine companies? They both got annihilated. Moderna's down 90% from its peak. 90. It has completely round tripped the benefit that they got from having, developed those vaccines. So if you were in a covered call, remember the first thing you're doing is buying the stock. If you buy a stock and it goes down 90%, that's not good. So the performance I was just talking about includes...
But these single stock ETFs that YieldMax does, they do not buy the stock. They buy the synthetic, ladies and gentlemen. It's different when you buy the stock and do cover calls on them, or puts, sell puts on it. You can acquire more if you sell puts and it goes down. Then you can try to do cover calls to make some of that premium back. But this guy's not telling you that. They do a synthetic call, ladies and gentlemen, because he won't tell you put more money into his funds because they are sinking, ladies and gentlemen. Because YieldMax is a fraud and a scam, ladies and gentlemen. And if I was interview here, Marco's here, I would have jumped in so many times because he had not answered the question. He just rambling on like all YieldMax managers have done. Even Jay Pisciality did the same thing to other people, to other YouTubers that interview him. Ladies and gentlemen, if I ever had a chance to interview this guy, I'd give him the hard questions. Why are we losing our capital? Why? Why are we losing our capital? We earn that. We put our own money into to get paid for a payout distribution, but this stuff never recovers. It keeps declining, ladies and gentlemen. That's all I got to say. You watch the rest of the video, ladies and gentlemen. I'll put a link to it, how to get to it. See you in the next one, ladies and gentlemen. Peace out. I'm disturbed about this guy.